Hello, 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 hello. Hi all and welcome to another edition of YouTube Live, TraderCast. Hi, midday market outlook. My name is Phil and I'll be your presenter today. So let me just check that this is, I'm doing a simulcast here and I just want to make sure this is all working. Yeah, it's all good. All good. Let me check the audio. Audio is fine as well. We should have some talking news as well. Get ready for a busy, and potentially very volatile trading day ahead of us. For those of you who are not aware, we have non-farm payroll starting right now. So let me just see. Yeah, this is brilliant. This is working. Excellent. Okay, so we have non-farm U.S. non-farm payrolls, U.S. unemployment rate, and average hourly earnings due in about 15 minutes. And that event will likely trigger volatility across a range of the markets. We'll cover all of that, and I'll tell you a little bit about what I'm.
And the Bank of England's Peel, speaking on his vote for a 25 basis point hike, says we don't want to be in a situation where markets think we're all in, foot to the floor.
Excellent. I'll tell you what I'm looking at. I have one open position at the moment. I'm long gold.
Says the Bank of England needs to be nuanced and nimble.
If you hear this is a talking news, and we'll hear the breaking news as they happen in about 14 minutes. A massive breaking news will come out and trigger volatility across the markets. For those of you who haven't seen me before, this is me. My name is Phil. I'll be your presenter. If you're looking for a community of traders to join, if you are already experienced or intermediate or maybe new but need some help, come and join us at TraderCast.com. Check us out. We do this every day. You're looking at the kind of YouTube live version of what we would do in TraderCast community, where we would post trade ideas and a community in a community segment as well, where you can check that the levels, engage, talk to me, ask me questions as well. So that's TraderCast. If you are looking for the education, check out my courses on mytradingskills.com. Some of these courses are completely free. Really good indication of how we would teach, and if you like the way we do it, feel free, reach out, and we'll try and help you. If we are not your cup of tea, go and find somebody else. It's not a problem at all. A little bit more about myself. Over the past 10 years, I had the privilege of speaking in front of various different industry events. I spoke in front of thousands of different people. I taught some of them how to trade, and some of them were brand new, some of them were intermediate or possibly a little bit more experienced, and they needed help with a specific area of their trading. Big disclaimer, this is not advice, this is my opinion and experience only. I'll be showing you what I'm looking for today. I'll show you my open positions, and I'm basically showing you almost like a proof of concept of what I think a new trader, or maybe early stages intermediate trader, should be able to do. So this is very simple approach to trading. You'll see most of my charts have they have no indicators of any sort. It's basically just a price action, and today we are trading the news. So this is my current position. I'm currently long gold from 1793. And I have a stop in place, and that's the only position that I have open. I normally close everything that I have intraday ahead of non-farm payrolls, and that's going to happen in about 12 minutes time. So get ready. In 12 minutes time we'll see a massive volatility. So I'll show you my trade, and then I'll show you this other few markets. So this is Dow Jones, this is gold pushing higher, this is euro dollar, this is cable, sterling dollar pushing lower. I'm looking for a short sell in cable, and this is dollar yen as well, a little bit softer, capped by 115. I have a couple of working orders, and I'll tell you about them in a minute. And I'm definitely looking at FTSE at the moment at 75.20. I'm looking at FTSE as well. But first things first, let me just show you my gold trade, and I'll talk to you. I'll basically talk you through what I am going to do right now and the reasons why I'm doing it. So I got filled with pending order at 1793. After this big sell-off and the reversal, I got filled at that level because I had a pending order there. You can see that my current position is here, and my stop loss is, I don't know if you can see my stop loss correctly, because that corner of the
We're
screen
10 minutes away from the bottom of the hour and the release of the US jobs report.
Let's hear this.
US non-farm payrolls median estimate for January is 125,000. Quite a wide range of estimates though, between minus 400,000 and plus 385,000. That's against a prior increase of 199,000. The unemployment rate seen unchanged in January at 3.9%. The range 3.7 up to 4%, and average hourly earnings seen rising by 5% month on month against a prior 6%, and 5.2% on the year against a prior 4.7%. The private payrolls for Jan seen at 150,000 against a prior 211,000. Manufacturing payroll seen rising 25,000 from a prior 26,000. The work week hours seen unchanged at 34.7, and participation seen unchanged as well at 61.9%. Moving to Canada, net change in employment for January, we're looking for minus 110,000. That's against a prior increase of 78,600. Unemployment rate seen dropping to 6.3% from 6%. And the hourly wages for permanent employees seen rising 2.1% on the year against a prior 2.7%.
Okay.
Just going back to the jobs report, before we take a closer look at the bank expectations, just a few things to note. According to the Census Bureau household survey, nearly 9 million people reported being out of work in the first couple of weeks of January for COVID-related reasons. This includes because they were sick, quarantining, or taking care of someone who was. Now, if an employee is out sick and doesn't collect a paycheck during the survey week, the BLS doesn't count them as employed. This could mean huge distortions from Omicron in the January jobs report. Also been warnings from the White House this week that the payroll number could be weak. The economic advisor Brian Deese, and the numbers could be confusing as COVID illnesses are recorded as job losses.
Okay, I'm back with you now, and I do want
among
to
the major
you...
banks, Goldman Sachs are the low-end estimate today. They're looking for minus 250,000 jobs. Morgan Stanley looking for minus 215,000. Bank of America minus 150,000. Wells minus 100,000, and Nomura minus 50,000. Moving to the positive side, UBS and Barclays going for plus 50,000. Citigroup 70,000. BNP and Deutsche 150,000, alongside JP Morgan. Credit Suisse plus 200,000, and HSBC, the top estimate, looking for plus 225,000.
Okay, so this is what's happening with my gold trade. So I got filled at 1793.
So Goldman Sachs with the low end estimate of minus 250,000. Their note this morning, they say that.
Okay, my stop is at 1783, so that's why my stop. I don't have a limit order. I would like to take partial profits as I go along and have the ultimate limit order up here towards 1847, 1850. Okay. What I'm going to do, because we are going to get non-farm payroll numbers, and I feel that we could get a weaker number. So we could see a volatility across anything relating to dollar and US equities as well. I would like to do a couple of things here to protect myself. So the first thing is I'm going to close a half of my trade here, because this is a swing type trade, and I'm going to take some money off the table. So I'm closing half of my position. So here we go. I'm closing my half position right now. Happy with that. And what I'm also doing is I'm moving my stop loss above my entry. So my stop loss is moved from 17, it was initially 1780, and then the one that you saw now was 1783. I moved it above, and my stop loss is up here. So I'm locking in 6.6 points on this trade, or 99 euros, additional 99 euros of potential profit. So if the price goes against me and starts moving lower, and I don't have time to close my position before it reaches this level, I'll be stopped out with a sum of the unrealized profit that I currently have on this position. if the price corrects a little bit and carries on higher or breaks above this level. And the reason why I'm taking partial profits, we have clusters of the previous lows here. The price consolidated at this area in the past and also here. So therefore, it's likely that we could see a bit of a consolidation here as well. And the trigger could be that non-farm payroll. If we see a breakout and a push higher, an hourly close or 4-hourly close above that level, in particular an end of day close above 1820, I would expect a gradual move higher and continuation to the upside towards 1831, 1845, 47, and then possibly even 1850 over a medium time frame. Now that's my current open position and the management of that position. The other things that I'm looking at the moment is I have nothing open from the intraday point of view, because it's a very, very dangerous thing to have something open ahead of such a big economic data release. Earlier this week, for those of you who are familiar with trading, and for those of you who are new, don't be confused. This is not rocket science. You just get used to this. But it's a little bit of a terminology here. We got a report which was called ADP employment change. And that report normally precedes the non-farm payroll and US unemployment rate report, which comes on Friday, first trading Friday of the calendar month. Okay. And that was a much weaker number than what market anticipated. It actually came in as negative 300,000, and market was expecting a build or a growth of 185,000, if I remember correctly, of jobs for ADP. So that number is normally used as a forecasting tool for what we might get with the non-farm payroll. So if the non-farm payroll numbers, basically this is the job, a number of jobs created in non-farming sector in US over the past 30 days. And this is quite important because this has direct correlation with unemployment rate in US. The higher the unemployment, that means more people out of work, less disposable income for spending and retail and buying stuff and keeping the economy going, okay? If unemployment dips, and unemployment is currently 3.9%, and if unemployment dips, therefore more jobs created, more people working, more money to spend, everybody's happy, more retail activity, more things to buy, then that's good for the markets. Markets like that, and then equity markets normally rally on that type of news. Okay, so that's the basic logic behind it. Now, what you're seeing here is a very, very simple approach. So this is Dow Jones, this is my gold here, euro dollar, sterling dollar, and dollar yen. So I have a couple of orders. I don't have anything open, but I have a couple of orders in place ahead of this number, and I have a long euro at 115. I am looking to see if we break through 115 and push higher, then this would be resistance 115.30. I would likely take partial profits there if that happens. Otherwise, if I see a corrective pullback and a further selling pressure, so something like this happening, and the price closes below 114.30, I am bearish. Therefore, I would like to short sell this and look for a further correction. And that correction would be based on a basic extension to the corrective pullback ABC or 1, 2, 3 or whatever you want to call it. It's not a rocket science, but it's a corrective pullback towards 1360, 1350 to the downside. For those of you who traded before, what I've done, this is a fib retracement, it's 61.8. So that's the reason for it. So I have a couple of things that I'm paying attention to with euro. I would be happier with the bearish setup because I feel that that will be fast and furious. But I'm happy to play this on both sides if I get the trigger. The other thing that I have as an order as well from the currencies point of view, you can see there's a big shaded area here. And for those of you who saw my dollar Japanese yen trades earlier, these levels will sound familiar to you. This push higher and a break above 115 appears to be bullish. Therefore, I'm looking to buy above here for the move higher. Alternatively, if we see a dip lower and a close below 11470, which is this area down here, then potentially the price could reverse, and this could trigger a dollar weakness, and we could see a dip and then retest of these lows. So therefore this is the bearish reversal from below. I have a couple of orders here. I'll see if one of them is triggered, and then I'll readjust it and act accordingly. So that's where I am with dollar Japanese yen. And I told you that I am also looking at, here we go, numbers are out.
467,000 for payrolls, unemployment 4%, earnings spot 7 on the month and 5.7 on the year. Net change in employment for Canada minus 200,000, unemployment rate up to 6.5%. So US non-farm payrolls coming higher than expected, 467,000, beats the 150 expected. Prior has been revised up to 510,000 from 199 prior. Unemployment rate rises slightly, 4% from 3.9. And there are beats for earnings as well. Spot 7 on the month versus spot 5, and 5.7 on the year versus 5.2% expected. Average work week hours does drop though, 34.5. Participation dropping as well. Rising 62.2% from 61.9.
So I'm out of the trade. I'm flat. I have nothing open. There is a reversal. The reversal that you're seeing now is triggered by a US dollar strength. You're seeing, here we go, dollar Japanese yen pushing higher, dollar CAD pushing higher. You can see sterling dollar pushing lower, euro dollar pushing lower there as well. So fairly uniformed reaction as well. So this is gold. I'm happy to be out of the trade. Don't want to be in it anymore. I'm looking for a reaction now. So I should be getting, here we go, my dollar yen triggered. I'm in this trade at the moment. Let me show you. So if you remember, I was telling you that 115 level here. Okay, you can see how quickly it went through. Let me show you the trade right now. This is triggered by economic data. So what I'm doing here is I'm showing you a practical application of a particular trading strategy that we discuss further and describe and show you how to use, which is called volatility breakout. And what I'm going to do right now, look, the market is moving higher. I'm closing half, happy to close half. Closing half, 115.20. If you remember, that was that other level. So I'm taking partial profits here. And what I'm going to do right now, I'm going to move my stop at break even. Now I have no risk. I have no risk on this trade. There is always risk. But if the price reverses, I'll be stopped out with nothing for the second half, and I took first half off the table and I paid myself. So I'm happy with this trade at the moment. I'm gonna let it run. And see where it takes me. See where it takes me. I'm really happy with this. Really happy with this. Okay. Also really happy, and I'm feeling really chuffed now that I've closed my gold. Look, I've closed my gold at the right level. Now I'm going to see if I can reassess it and get in again. At the moment I'm just checking the levels, and I want to see if this settles. I don't know if you have any questions. Feel free, ask. If you want me to cover anything, I'll be more than happy to do so. But cable lower, euro dollar lower. My euro dollar trade is not triggered just yet. Gold pushing lower, but I would love to see a push lower on euro dollar. I think that's quite good. Now, non-farm payrolls 467,000 versus
An
125,000
update
expected.
on US
Here we go.
interest rate futures, now said to imply more than 5 hikes in 2022.
For those of you who are wondering what's going on now, you're seeing that a dollar is strengthening, and the logic behind this type of move is because non-farm payroll numbers came in better than expected. Okay, US unemployment rate increased to 4% from 3.9. So unemployment edged higher. So there is more people without work. But the non-farm payroll number came in better, average earnings and so on. So the thinking here from the market participants, in particular from the US trader side, is that because numbers are better, it's now more likely that a Federal Reserve will carry on hiking rates more aggressively throughout this year. When a central bank is hiking rates, they're trying to control the overheating economy. They're trying to slow down the overheating economy and exuberant behavior of the consumers and an economy in general, because the inflation is going higher, so therefore things are becoming more expensive, and there is more demand, people are looking to buy stuff, and the prices are edging higher across the board. So that could be driven by expensive oil, transportation costs, or just lack of supply and so on. So I don't want to bore you with all of that stuff. We talk about this all day long in TraderCast, but the logic is that because that's a likelihood, that normally means that if central bank is tightening and hiking rates, that's usually very good for the currency. In this case, US dollar is strengthening against other currencies, in this case like sterling, like euro, dollar, yen.
More from US rate futures, now said to predict a 34% chance of a 50 basis point hike in March post payrolls. That was just 18% ahead of the data.
Excellent. So this is dollar yen. Dollar yen, it's pushing higher. So I'm really happy that I'm in this trade. And gold is pushing lower. Why is gold pushing lower? Well, if dollar is becoming stronger, gold is traded in dollars, in US dollars. So stronger dollar means weaker gold. It works in that way. Look, I'll show you the same thing with silver. Silver is also pushing lower. Okay. There is another currency pair commonly traded is dollar CAD, US dollar, Canadian dollar, pushing higher. US dollar is stronger than Canadian dollar. It's all correlated, and it's all triggered by this particular news. So if you haven't traded this before, if you haven't heard about this before, you're missing out, because today you just witnessed probably a very typical market volatility breakouts, which are triggered by specific news releases or data releases. So now there is a little bit of a pullback here in dollar yen. My stop is at the appropriate level. So let's see where I am at the moment. Euro dollar came close to this 14.30, if you remember. Look, it came close to 14.30, and now it's dipping off that level. So euro, for those of you who don't know what happened yesterday, yesterday we had European Central Bank rate decision and monetary policy statement and subsequent press conference, where a lovely lady called Christine Lagarde, and she's in charge of European Central Bank, was saying certain things which triggered a euro currency volatility. In particular, this is against the dollar. Now, let me see, where are we at the moment? Nasdaq 400, S&P 4195, Dow Jones 3479. Okay. Look at the gold. Look at gold. Look at gold. It's just tanking. I'm really happy now that I've done what I've done. If you're new to trading, if you are trading, you're becoming a risk manager. That's what you are really becoming. You're constantly managing risk. You're constantly anticipating the risk to your positions, and you are always assessing the risk that you are willing to take, definite amount of risk that you're willing to take before you enter into any of the positions, to achieve a potential definite amount of risk for a potential but disproportionate amount of gain. So the risk must be always smaller than the potential reward. And that's the only thing you can control. You can control where you got in, why you got in, where you got in, and where did you put your stop loss. How much are you willing to lose on this trade? Because not every single trade is a winning trade. Okay, so I am, oh, here we go, I'm triggered on Euro as well. I'm triggered on Euro. This is a much shorter term trade. Let's see, this is fluctuating between the winning and losing, but I'm in this trade at the moment. So let me show you where I am with Euro. Do you remember I told you that I had a little order at one spot 1430? Here we go. We just got triggered there. So there is a 5 mini contracts on this trade. So it's a small position. It's not a huge position, and I got triggered there. I would like to put my stop up here. So I'm risking about 47 points on this trade. Let's see if I get a little bit of follow through. And what I would like to do is I would like to take the swing low to swing high, if you remember, and find that retracement towards one spot 1360, and then this swing high one spot 1330, and then these clusters of the lows at one spot 1270, 1260 for potential take profit, potential take profit, potential take profit. And if that happens, I will move my stop at break even, below entry, below entry, below entry, below. As I'm taking the partial profits or get the opportunity to take partial profits, I will be moving my stop to protect this position. So that's where I am at the moment. So it's gone back into red at the moment, a small loss, but the stop, the initial stop is up here about 47 points, and I'm in this trade as well. Happy with dollar yen, happy with gold, happy with this Euro trade. I'll keep an eye on that and see if we get more follow through on there. The other thing that I'm paying attention to, I've just realized we are, hey Patrick, lovely to see you again. Kabogo, Robert, Rose, Eladio, Jonas, Israel, Said, Haifa, Mike, Suta, Voyage, Bob, Tommy's, F. Dean, Dacio, John, Tom. I can see a few people logging in from the outside. JJ, Alex, Iqbal, Ken, PJ, Fidel Castro is with us as well. Hello, Fidel Castro. I hope you are the real thing. K, anybody else? Anybody else? Welcome, 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 guys. If you have any questions, ask. If you have any questions, ask. I'll be more than happy to cover stuff that you need to know. Let me just see. For those of you who have access to TraderCast, full access, I've posted...
just a heads up, the US Labour Secretary Walsh is set to appear on Bloomberg TV in the next few minutes to discuss the US jobs report.
There you go. That could be another trigger. There could be another trigger of possible volatility. Let's see where we are. Access to Pool Trader, welcome buddy, lovely, thank you for asking, thank you for commenting. I can see you watched quite a few of these events, so hopefully you're enjoying it, buddy. Hopefully you're enjoying it, you're finding it beneficial. Hopefully you're finding it beneficial. Where am I now? Come on, Euro, you do want to dip lower. I'm in the money with Euro, tiny profit with Euro, not a big position, but hey, now this looks like a potential reversal here. So a bit too soon for me, but let me see if I can do a little scalp. US markets are going to open at about 40 minutes from now. Sorry, 45 minutes, apologies, 45 minutes from now. My time here, it's 1:45 afternoon. It's 1:45 my time. US cash equities open at 2:30 my time. After my afternoon time is their morning time, and that's when these markets become quite volatile. So this is S&P 500, and apologies, I can see that I have loads of stuff here. Let me just delete some of this stuff because this is becoming cluttered. It's all making sense to me, but I know some people are saying, Phil, you have too many lines, I don't know what it means, what are all these colors? Okay, I'll simplify it and try and explain. Okay, so this is a corrective pullback. This is a corrective pullback against the overall prevailing trend. So this is the trend. The price lost the trend and now it's kind of reversed to the downside. So let me just delete this one as well. If I go to this time frame, this is a corrective pullback against the overall trend, and this looks like an oversold bounce back, and this oversold bounce back is currently creating something that's known as a bearish continuation pattern. And I don't want to confuse you with the terminology, but for those of you who are brand new or fairly new, I would like you to understand that this type of oversold corrections, short squeeze, basically oversold corrective to the upside, has tendency to break to the downside, And what price action traders are looking for, they are looking for something like this to happen. Okay, so this is what they would react to. So they're looking for the price to dip lower, retest from underneath, and then carry on selling to the downside, like so. So that's what they're looking for. If that doesn't happen, and we see an oversold bounce back from here, then it's quite possible that there'll be more sellers at 45.33 for another leg lower. Okay, that's the basic premise. So what would I like to do is, I have two options. I can look to find this short squeeze to the upside, and then look to engage with that trade from the buying, scalping into this, and just looking to take few points out. Or I can wait for the price to dip below these lows, dip below these lows, and closes below 44.60 or thereabout, for a potential short setup and another leg lower. So I have two options here. I'm sitting and waiting. This is the 4 hourly, this is the hourly indecision here. I would enter in a 15-minute time frame, and I'm looking for some kind of confirmation. I'm looking for something to tell me. The price action should tell me what to do here, and currently I'm not getting any triggers, so I'm just staying to the sidelines here. Absolutely not touching it. Dollar yen is moving higher quite nicely. Euro is thinking here. Let me just show you with euro. So there is our euro here. Corrective pullback came to that 14.30. I would like to see possibly a continuation to the downside and something like this develop. A retest and then another leg lower. That's where I'm with euro at the moment. This can all change and reverse, and this candle is going to take another 9 minutes for this candle to finish, because this is the hourly candle, and only after that time I can read this candle and see what it's telling me. So this is currently telling me that there's selling pressure, that bearish traders, people who are more fearful, are engaged with the market and looking to get out of their position. So anybody who was long, who was buying low with intention to sell higher, they're looking to close their positions and protect their profits. Anybody who is bearish, who thinks that euro should be weaker than US dollar, are looking to find reasons to short sell, to open their position by short selling, and they're looking for a corrective pullback. If that happens, this is where I would like to close my short, around 130, 113.60 or thereabout. Okay, so that's the basic premise with euro dollar. If I'm wrong and we see a breakout and a push higher, then I'll be stopped out fairly quickly, and my stop loss will protect me. Okay, here we go. We are. Is there anything that you need covered, guys? I can see here there's a few posts. Sorry, for those of you who can access TraderCast, you can see that gold, Nasdaq, and also WTI crude levels were posted with the trading setups, the charts, trading levels, and the explanation and the possible trade setups there as well. US jobs growth stronger than expected as economy shrugs off Omicron, according to BBC Business. Market analysts, non-farm payrolls 467,000 versus ADP reading of minus 301,000. ADP is much weaker. Payrolls rose far more than expected in January, despite surging Omicron cases, according to CNBC. Reuters, just in US January job growth beat expectations. Economy adds 467,000 jobs. Unemployment at 4%. So look, that's basically the reason why we are seeing this volatility. That's all. Really happy now that I'm out of my gold trade. What would I like to do with gold? Well, I would like to see if I get another opportunity to participate with gold trade, but this is quite scary. I'm not touching this at the moment. If anybody is trading this, they're trying to catch a falling knife, and that's quite dangerous thing to do. So 1796 below that level, we have 1795 below that level, we have 1790, 1788, and let me just do something now, and I don't want to confuse anybody with what I'm doing, but this here is a 61.8 Phoebe, so that would be nice full retracement there. I'll see what happens with gold that says 1793 again. Look, I got filled on that level before. I'll see what happens when the price gets to that level again. But I'm actually quite happy with the way things played out, because what we did here live was actually show you how the market volatility can change very, very quickly, and even your lovely profitable trades can become losing trades very quickly if you don't protect yourself, if you don't react to them and take appropriate action, either by taking partial profits or moving the stop loss at the right level, or maybe even, as I was explaining, closing the trades ahead of the number, not having anything open ahead of such a major release. So there is a little bit of indecision here. This is a quite telling. This needs to settle. This is only a 15-minute time frame price action. This is the 5 minutes, so there is no trigger here. I would like to see if this one settles where it is, and then we see another green candle maybe form here. So potentially that could be okay. Look, it's coming to a 50% of fib from swing low, swing high. Maybe some people are looking at the same or similar level, but at the moment very little to do here. We have about 4 minutes until the end of this broadcast. I will be stopping today a little bit earlier at 2 in about 3 minutes time. We've been going on for quite some time, almost 45 minutes, 50 minutes. I will be posting the week ahead video over the weekend, where I'll be looking at the key market economic data releases for the forthcoming week. That will be a very short summary of what to expect from the economic calendar and things that can trigger similar volatility, not as much, but similar volatility reaction in some markets for the next week. And also I will be posting the key trading levels for Bitcoin, DAX, German 40, Nasdaq, Euro dollar, sterling dollar, dollar yen, gold and oil. That'll come over the weekend, so feel free to subscribe if you want to receive them or get a notification when they're posted, or if you are already members of TraderCast community, you'll find them on the home page under video reports. You know where you get your access to Bloomberg TV and the news feeds, the breaking news feeds. In the top left hand corner you'll be able to see the week ahead video as well. That's gonna come over the weekend. Is there anything else that you're looking at, guys? Is there anything of interest to you? Anything of interest to you? This euro dollar is a bit stubborn here. Look, it's reversing here a bit. It's not doing anything. I'll just show you these couple of positions that we have. sorry, that I have, and I'll tell you what I'm doing with that at the moment. So this is dollar yen. Dollar yen is in the money.
The US effective Fed funds rate unchanged today, spot 0.8%.
I took partial profits and I moved the stop at the break even at entry. So I'm going to put my limit order. So the limit order is going to be up here at 115.67. So let's see if that gets hit. This is the previous high. It's likely that there'll be a bit of a consolidation there. The stop loss is currently at break even, and what I'll do is I will move my stop higher. So what I'm doing right here is I'm moving the stop above the entry, and I'm locking in another 16 points out of this trade. So this is the current open P&L. This is the number of contracts which were left running after the initial spare me a second. Yeah, that's still on there, nothing there. And the stop is now above that entry, locking in some more money. So if the price doesn't go there, instead carries on falling, I might manually close that position before the price gets to that level. Okay, if I am away from my desk or something happens fast and furious and I cannot react to that, at least I'm going to be stopped out with a little bit more money. But from the risk to reward ratio point of view, this is really, really good. I'm really happy with it, really happy with this trade, keeping it open, looking for more US dollar strength. My US dollar strength, my euro dollar, apologies, is stubbornly just sitting around that 1.1430 level, and it's fluctuating between the small gains and small losses. So that's where we are. The stop is up here. This is currently losing about $19 on the trade. It's a small size, it's 5 contracts short. And for those of you who are new, this is red because I've opened my position by short selling this. So I'm not buying, I'm selling euro dollar, looking to cover my position when the price falls. So I would like my limit order down here at 113.60 or thereabout. Okay, so from the risk to reward ratio point of view, this is not the most exciting one. I normally like to see multiple levels of risk. This is my risk for the potential gain, so 1.5 points of gain for the risk taken. I normally like to take 2 to 1 minimum, 3 to 1, 4 to 1 or bigger for the entry to make sense to me. But yet again, this was triggered by news. I'm gonna keep an eye on it. I will likely stop myself out before this is triggered. Okay, so I'm moving my stop loss slightly lower now, 29 points away from where I enter. So this is the amount of risk. I will likely take some partial profits at 113.60. I'm expecting to see a gradual move lower and continuation of this selling pressure on euro dollar. That's where I am. Yes. Kabogo, yes, Kabogo is paying attention to gold. He's saying gold is moving down fast. Hopefully you found it beneficial. See if there's any more. Kabog. Questions, comments, anything like that? Good, good. Okay, well done. Sorry, for those of you who are watching this on the outside, there are just messages coming in. So 1793 is tagged here again. 1793 is tagged here again in 15 minutes. You can see euro dollar is moving high. I don't like that. I'm going to be stopped out with a loss on that trade. Look, there's a bit of a pause. Here in gold. Very close to this 1793 level. No trigger just yet. Nothing there just yet. Keeping an eye on it. So this is the area of interest where the price could possibly reverse. Could at least pause for a bit, for a small oversold bounce back. But I'm not rushing into this at the moment. There is a bit of a reversal now in dollar yen as well. I just realized we went over the hour. Guys, I will need to stop now. It was lovely talking to you all. I'll be back with you next week at the usual time. Stay safe, happy trading, enjoy your weekend, and stay in touch. And hopefully you found this beneficial and informative. Let me just see if I can a little bit too much. I'll update the open positions. So gold, the first lot was closed at 1813.90, almost 1814, and the other closed at 1806. So let me just
The swaps market now said to show Fed 3/4 point hikes being priced in by June.
closed half at 1814 and another half at 1806, thereabout. So that position is no longer open. That's been closed, and I'm just going to show you all of that. I'm currently long US dollar Japanese yen at 115. Closed half at 115.22, and still have other half running. And I am also short. No, that's the wrong color. Euro US dollar at sorry, this is just where did I get in? 14.30. This is open and it's a losing trade at the moment. This is a losing trade at the moment. So that's where I am. Thank you for watching. Thank you for listening. Stay safe. Happy trading. Bye for now. Hopefully I'll see some of you in TraderCast community next week. Keep an eye on that weekhead video and enjoy your weekend. Bye for now. Thanks.